Welcome back. Yes, I'm sure the grade 12s have not moved away anywhere far away from their TV screens. Why? Because you want to see what have we done? Where are we leading to? Because we're leading to something very, very important. But before we do that, let's recap what we've done so far. Number one, when we sell shares, 2 accounts involved: debit bank, we're receiving money; credit ordinary share capital. Simple, isn't it? Let's move on. This was the par value of the share. Then we go on to the second part, where we sell shares at a premium. Watch this. A debit to bank, once again, a credit to my ordinary share capital, and a credit to my ordinary share premium. Okay, clearly understood. Let's move on, guys. When will this happen? When my shares are sold for higher than the par value. In other words, the shares were sold at a premium. What about provisional tax payments? Surely you must be shouting out these answers by now because you know exactly how to handle it. What's the entry? A debit to SARS income tax and a credit to bank. Remember, you would also do this if you were paying any outstanding amount from the previous year. Got that? Brilliant. Therefore, we're saying you could either have 2 or 3 payments made during the year. Why is that? When will there be 3 payments made to SARS? When your SARS income tax account has a debit balance at the beginning of the year, it means they are owing you money. But if your SARS income tax has a credit balance at the beginning of the year, certainly it means that you will now have to make 3 payments to SARS. 1, to pay last year's amount, and 2, to record the 2 provisional payments of this year, therefore the 3 entries on the debit side of your SARS income tax account. So now what happens to income tax? Yes, when you receive your assessment, when? At the end of the year. What's your double entry? Debit income tax. Why? Because it's your expense. Remember, it's your expense account. Therefore, it's being debited. Why are expenses debited? Because they decrease the equity of a company. What do you credit? You credit SARS income tax because that's the amount that you owe to SARS. At this point, allow me to pose a question. What type of an account is SARS income tax? And the answer is, it depends. On what? On whether the balance is a debit balance or a credit balance. I'm stressing this. It's very, very important that you understand it. Why? Because later on, when we come to other sections, I'm going to call you back and remind you of what I said about the SARS income tax account. So guys, don't forget it. When do we do the entry for the income tax? At the end of my financial year, after I've received my tax assessment for the year. Okay, dividends, interim dividends, debit ordinary share dividends, credit bank. What about the final dividend? Debit ordinary share dividends. Remember your expense. There goes. Immediately when you have a dividend, you realize your expense. A debit to ordinary share dividends and a credit to shareholders for dividends. When is this one? At the end of the year. Why? Because that's the dividend that you have recommended. Okay. Where does all this fit in? It fits in to this very, very important account, namely the appropriation account. Understand that your appropriation account is a final account. That's right. It's the final account. And what will it have? On the debit side, do you recall the income tax that we transferred? Yes, by means of a closing transfer. You are debiting your appropriation account and crediting income tax. It's a journal entry. It's a closing transfer done at the end of a financial year. So close the nominal account and transfer it to your final account, namely your appropriation account. Now the same occurs for the ordinary share dividends. It's an expense account, an entry on the debit side. In order to close it, I must credit it. What's my journal entry called? A closing transfer. You're closing one account and transferring it to a final account. Therefore, ordinary share dividends on the debit side of that account. So you've closed off your two nominal accounts unique to a company. What are they? Income tax and ordinary share dividends. And what have you done? You've transferred them to your appropriation account. Okay. Carrying on with my appropriation account. Remember, from your profit and loss, you transferred your profit into your appropriation account. There goes. And now, what happens? Remember, we said all profits made by a company belong to the company. Therefore, a new account called retained income. Now notice that this one will be the beginning of the year. Whatever retained income you've had, you'll bring it into your appropriation account. That's that one there. And this one here is your end of the year. In other words, the closing balance, the balancing amount in your appropriation account is the retained income at the end of the year. Well, guys, that's it for today. We've done important work on companies. Make sure you go back into your question papers and you prepare and you work and you engage your question papers so that you fully understand what we have done today. Remember what Ashraf says? Aim for the moon. Because if you don't get there, certainly you're an accounting shining star. You will definitely be one. So until the next time, be good. Bye-bye.